Hello, my friend. This is Rob Smith of the In the Black Quant Edge VTF here at T3 Live with the Quant Edge 4-week coaching program, week 2, where we begin to talk about time frame continuity. We've talked about actionable signals now for week 2. We're going to go into time frame continuity. As you peruse over the disclaimer here, as we continue to go on, the good thing about taking our time like this is you can always go back, get to those actionable signals, and then in this time we're going to talk about time frame continuity because we're going to start putting all three together, and that's going to be very important going forward. All three universal truths matter, no matter what you're thinking. It's being like, I got it, Rob, and take the actionable signals. That's what causes price action to move. Everything matters, and we're going to put it all together slowly but surely. So, when it comes to time frame continuity, we're going to have time frame participation groups. The universal truth of the opening price, the 4 C's of continuity, the importance of uncoupling, event continuity, combining actionable signals with time frame continuity, identifying natural buyers and sellers, and live charts. So we can go look at some of the stuff in the past that was well known. All right, section 1, time frame participation groups. There's 4 major time frame participation groups. Right? The 4 majors, these represent how we quantify full time frame continuity. Because of the importance of these 4 groups, when analyzing any futures, ETFs, stocks, or currencies, we always look at least 4 charts. Got that? At least 4. So oftentimes you'll see guys on Twitter and whatnot posting, this looks good, and they're posting 1 time frame chart. Completely incomplete. Very, very incomplete. The work is not done. We're always looking at least 4. The largest is the monthly group. The monthly group is defined by anyone that has put on, added to, or reduced a position during the calendar month. Although some may think a monthly chart is a daily chart showing every day that month, it is not. A monthly chart draws only 1 bar to represent the entire calendar month. So here, this last bar here is just what's happening during that month. This is a complete month. All right, so that's what a monthly chart is. All right, and it tells us the larger move. Is this thing going anywhere? All right, on the monthly. The weekly group. Weekly participation group is defined by anyone that has put on, added to, or reduced or exited a position during the week, right? Anything that you're doing, if you're getting out of it, if you've traded at all, you're going to affect it, and so that you're part of the group. So this last bar is just last week for the Dow going into 20,000, right? So each bar represents a week. The daily group. Daily group is defined by anyone that has put on, added to, or reduced a position or exited a position during the day. Daily chart only shows 1 bar for every day. So this is just 1 day, 1 day, 1 day. All right? A lot of people mistake that stuff, so we wanted to get through to that. 60-minute group. Defined by anyone that's put on, added to, reduced, or exited a position in the 60-minute period at the bottom of each hour. 60-minute chart draws 1 bar for each hour. Right? So that's how we can separate these 4 groups by time. Then there's also the intraday participation group. So just much like we have the largest monthly, the weekly, the daily, and the 60, we can also break things down to intraday participation groups. All right, this is going to be the 5-minute group, 15-minute group, 60, 30. All right, and so that can help us gauge the smaller participation groups against the larger ones. All right, all this stuff's going to matter. Section 2, universal truth of the opening price. Why is this stuff important? All right. So what we want to look at is, what does time frame continuity mean? All right. And so when we're using the larger groups, bullish time frame continuity or full time frame continuity to the upside is defined as the last sale being higher than the opening of the monthly, the weekly, and the daily, and the 60-minute. Right? So here you can see the 60-minute, green. It's moving higher on the 60. Is it moving higher on the day? Yes, it is. Is it moving higher on the week? Yes, it is. Is it moving higher on the month? Yes, it is. All right, so it's going up on all time frames. That's what full time frame continuity means. Okay, so bullish time frame continuity or full time frame continuity to the upside. Then we can go to bearish full time frame continuity or full time frame continuity to the downside. All right, it's defined as the last sale being lower than the opening of the monthly, weekly, daily, and the 60-minute. So once again, you go through here. Is it red on the 60? Yep. Is it red on the daily? Yep. Red on the weekly? Yep. Red on the monthly. Everything's going down as far as we know. All right. Okay, so it's extremely visual, and that's why when you look at 4 charts, you can see this right away. So if you look at this, this tells us the level of aggression of the buyers and sellers is high, right? Everybody we know. This cannot be disputed because all known participants are buyers on the upside, or all known participation groups are sellers on the downside, right? That's why it makes it a universal truth of price action. You can't dispute that, right? You can say it might start going down, but at this point, anything that has full time frame continuity to the upside, that can't be disputed. Anything that has full time to the downside can't be disputed. It's also important because it represents when all participation groups are confirming each other and are in control. All right. So by confirming, 60 is reconfirming the daily, which is reconfirming the weekly and the monthly. All right. All that kind of stuff. All that stuff's confirming each other, and we'll get to that as we move along. And then continuity and conflict. All right. What that means is, right, anytime one or two of the candles are a different color than the others, the price is considered to be in conflict. Right? We don't have continuity, right? The participation groups are different. Here, the 60's green, daily's red, weekly's red, monthly's green, all right? That's conflict, right there. It shouldn't be too hard. Full time frame continuity or conflict. Intraday time frame continuity. Although we are always aware of these major time frame continuity levels, we're also aware of the lower time frames as well. Right? We define the intraday time frame continuity levels as 60, 30, 15, and 5-minute time frames. And the greater the volatility, the greater importance of intraday time frame continuity. Is it increases what we were trading, is that if the volatility increases. And the reason for that is because at that point that you can be seeing as much movement and volume in a 5-minute bar or a 15-minute bar that you normally see in a day or a week. Right? And so as things are really moving, we can break it down further, down to those shorter term time frames. Right? And it also helps us to reconfirm even the longer term time frames. All right. The reason for this is because during periods of, right, here we go, sorry, movement, oftentimes volume, the lower time frames we'd normally see in higher time frames, what I just said. During periods of extreme volatility, such as like the opening, stuff like that, it's a 5, 3, 1. Right, down to micro like that, and we even have times when we can go sub 1 minute, but not everybody's going to be cut out for that, and it's that's, but it does matter because when things are really gunning, there is no signal. The one is just going because news is out, and you've seen that on a spike like that. So as far as automated stuff, even a sub 1 matters, but all of this stuff ties into time frame continuity. What direction is even the 5-3-1 going? Section 3, the 4 C's of continuity. Control. First, you got to ask yourself which participation group or groups are in control of the direction of the price. All right? So when you have full time frame continuity, everybody's going the same way, and we'll get to that. But control. Different groups can be at control in different times. Confirm. Are all the participation groups confirming each other? All right, they all going the same way. If not, are they in conflict? Are some going up, some going down? All right, just like we've been looking at here at the charts before. Change. Are the participation group or groups changing the continuity of other groups? All right, by green going to red, which changes a different one on different time frames. So we'll get to that in a second. But 4 C's, once again. Control. Confirm, conflict, change. All right. 4 C's of continuity: determination, control through confirming, conflicting, or changing continuity levels. At all times, we need to establish which participation groups are in control and for how long. Right? That'd be exhaustion. How long are these things? How much time do you have on it? The monthly group is the largest, thus represents the institutional group. The daily group is who is in control today. What direction is it going right today? The 60-minute group represents who is in control right now, as it is the most immediate direction. And that's why the flip's so important, right? So monthly group shows us the big move. Daily group, what's happening today as far as time frame continuity? Is it going up or going down today? 60 minutes is going up or down right now, right? So the 60, all right, get that? Get. Okay, so as we go through here, when the 60-minute and the daily groups are confirming, go in the same direction, they override the weekly and monthly group for control. The reason for that is because they're going the same direction today. We can't identify the weekly and the monthly group as participating, all right? Because these are in control. These are the immediate things that are going on today. This makes the flip very important, as it will either continue to confirm the daily for control or change the control back to the 60-minute weekly monthly groups should those be in the same direction, right? Any other combination will leave the 60-minute in control as the others are too conflicted, right? So what that means is that if the daily and the 60 are the same, right, they're definitely in control. That's what's happening right now, and that's what's happening today. But on that flip, if that 60 changes back against the daily, right, and the other two are going the other way, it's in conflict, but then we don't know, all right? Then the 60 is still in control. Because if the 60 takes that daily the other way, it flips it back into full time frame continuity the other way. So 60 and daily immediate can override the weekly and the monthly. 60 is the immediate, all right? And any other combination that would leave things too conflicted, right? So we always want to watch that daily and 60. If they're the same, that's control right there, right? Okay. The weekly group will reconfirm or negate the monthly group as the month goes along, and is reconfirmed by the daily and 60-minute groups throughout the week. So once we determine, if what direction the monthly is going, the new week begins, and that either reconfirms that or negates it, right? It either confirms it, right, by going with it, or it negates that monthly group and goes into conflict, right? And it's reconfirmed by the daily and the 60-minute groups every day, right? So it's a constant sequence of series. Monthly starts off, then each week, that week needs to reconfirm or negate what's going on there. And every day, the daily and the 60 have to reconfirm what we already know about the other two. So in this example, the 60-minute, the daily, and the weekly groups negated the monthly group as the monthly price was higher than it opened. Then the 60-minute, the daily, the weekly groups negated that by turning into sellers. As for the determination of control, we are very aware of any change in continuity by time and price. So if you look here on this monthly over here to the right, and you'll see the shadow or wick here and now coming all the way back. So what that shadow tells us, at one time, that was green going higher, right? However, as the week turned back down, as the day went back down, the red went back down, right? Completely negated that, right? So that monthly was meaningless as far as control is concerned, right? Because the three others are challenging that. We don't know that the monthly group is around. All we know is right now, this week, this day, and this 60, it's going down. Section 4, this brings us to the importance of the uncoupling of the time frames. So what the uncoupling means is the first time during any month where the opening prices of the four major time frames occur at different times, right? On any Monday, the daily, the weekly opening prices are the same, right? And the 60-minute, right? During the first hour, so on any given Monday morning, three of the four major time frames are the same. During the first hour on Tuesday, the opening prices of the 60 and the daily group are the same. So thus the earliest an uncoupling can occur ever is the second hour of trading on Tuesday. That's the first time we can have four separate openings. Right? So this does not mean that we don't trade until Tuesday. Right? It means that we gain more quantitative evidence into which gauge the probability of our trades based on the separation of the participation groups. Right? That's where we can start to identify the different groups, who's going to trigger who's affecting what, who's actually in control. So the importance of the uncoupling is that the last day of the month is between Friday and Sunday, so Friday, Saturday, Sunday. The uncoupling does not occur until the second hour of trading on the following Tuesday, right? What that means is because the month and the week will begin on the same Monday, for that entire week, the monthly and the weekly group are the same bar, right? We can't differentiate. And that's when we go back to what I was just saying. Second week, then we can uncouple from the month, and we can see if it's going to confirm or negate that. If the month ends on any other day, the uncoupling occurs during the second hour of the following day, right? Because we still have separate groups. So once again, every Monday, 3 time frames begin. The daily and weekly continuity remain the same all day because that weekly bar and daily are the same all day long, and only uncouple from the 60-minute during the second hour of trading when the first 60-minute time frame exhausts. Right? So that's when the 60 and the daily will uncouple in the Monday morning. Every day, 2 of the 4 major time frame continuity prices are established. The daily and the 60 start every day. Right? And so that's one of the problems when people talk about swing trading is 2 of the 4 major time frames start over every day. Right? And it's a continuous series. Are they going to reconfirm or negate everything? So the uncoupling on any given day cannot occur until the second hour of trading because the 60 and the daily will be the same for the entire opening 60 minutes. Event continuity, section 5. So events that occur during the trading day also form an important continuity level. Right? An event can either be a known event as well as unknown news events as well. Examples of known news events are going to be the weekly oil inventory numbers, Fed minute announcements, etc., stuff like that. Right? And unknown news is just unknown news. Right? When it comes out here during the day, it becomes an important continuity level. All right? So unknown events are unscheduled news events occurring during the trading day, and the continuity level for these events is at the price at the time the news events occurs, right? And that remains solid for the rest of the day, right? The reason this level becomes a new continuity level is because it changes the perception of the groups, as well as the level of aggression for buying and selling, because now they have different information. They have new information on which to trade. So the second any news comes out, that level is important for the rest of the day, whether you're above that. Right, so that's an additional continuity level. So on Wednesday, when the oil inventory number comes out, that continuity level will be the same as the flip continuity level because it comes out on the flip. However, that stays in force, or that level is important, right, for the rest of the day, because the perception of the buyers and sellers is changed by that news going forward for the rest of the day. Section 6, combining actionable signals with time frame continuity. As we continue to put the 3 universal truths together, we increase our evidence to help change our determination from possible outcomes to probable outcomes. And that's what we want to do. We know what the possible outcome can go up, can go down, go nowhere, right? So the actionable signal is going to help determine why something would move. And the time frame continuity is going to juice that up to get our probabilities higher because we know what direction it's going on several time frames. So once again, the importance of of the flip again, when we combine the actionable signals with time frame continuity. Last week we learned that the flip occurs as the 60-minute bar closes and a new one opens, all right, as well as being the only major time frame that can form and trigger an actionable signal during the same day. From a time frame continuity perspective, the importance of the flip is that it determines control. Right? That as the most immediate time frame, the direction of the 60-minute bar goes from the flip is the time frame that is immediately in control. That's why we watch that 60 so closely. It also determines whether all time frames are confirming or if they're in conflict. So when that flip happens, we already know what the other 3 are. Right? So we'll have a preference of which way we want it to go. right? Doesn't mean that there's nothing we can do at that point, but we would prefer that time frame continuity, full time frame continuity off the flip, as opposed to going to conflict. When we combine with the potential actionable signal triggering after the flip, the potential of change occurs as a new actionable signal changes the known conditions of the price. Because the actionable signal on the flip can trigger on the same day, that signal then confirms actionable signals that are in force, thus creating a combination. This negates other actionable signals, putting continuity in conflict. So what this means is that because not only do we have a time change on the flip, we can also have a known actionable signal change, right? Because we could have an inside 60, we could have a 60-minute hammer. Do we know anything else? Do we already have things in force? That way, not only does the time frame confirm or conflict, but do we have a confirming actionable signal on to reconfirm or negate what we already know on the other actionable signals? All right. Although the flip is an important form of new major signal and continuity level standpoint, we want to define price conditions across all time frames, right? Using actionable signals and time frame continuity. And we have no opinions and speak only in description of what we know to be true, right? On any given flip, we want to evaluate what conditions will be created if actionable signals are successful or fail. Also, how they will confirm, conflict, or change time frame continuity and actionable signals. Right? All this stuff matters. All this stuff's going to wind in together, and that's why the flip is so important during the day. And we focus on that. Combining actual signals with time frame continuity, the importance of the flipped concept. All right. This is akin to playing billiards. All right. If you focus on hitting one ball in without evaluating the effect of your next move, you're not a very good pool player. Right? Straight up. Good pool players take shots that will leave them another shot and so on. This is true for us as well. This helps us decide what actionable signals we want to take. What will things create? What's going to happen? If this works or if this does not, what will the resulting condition be? Right? That's very important. We're always going to be looking ahead because we're looking to add stuff as things continue to go our way. So should something work, what would happen next? And so on the flip, if it goes red, what would we know then? If it goes green, what do we know? If it goes inside and up, what would we know then? All this stuff is going to matter. So what we can do is we can look at some examples, and we'll do that in the next video. It's just the beginning, the video 1, to start on the road of understanding what time frame continuity is, who's in control, and then how we're going to put these actionable signals and time frame continuity levels to work. So we'll be back for video 2.